Welcome to HowStreet.com Radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim.
Today's show, where is gold, silver, and other precious metals headed? Hasn't been a pleasant couple of days for gold, but you do have some advice for people who are wondering what is going on.
Well, you know, if anyone listening to this isn't a bit depressed, then they're probably not normal, because it's been a struggle for everyone. Anyone who has a position, you know, it's been a struggle for me too, but I have not wavered in my belief that we're doing the right thing by not giving up. And I think that the stage is being set for a turnaround, which could be very surprising and very violent on the upside just when the last person has sold. Today, as we're talking, the metals are weak again, but they're still above those important points around 18-something for silver, say 18 and a quarter, 18.50. I think the ultimate low was 18.17 a little while ago. Gold is still above 1,200, and the mining stocks that I follow are up 10 or 15% off of their lows for this particular down move. So I'm encouraged and watching to see what's going to happen here, and I don't expect them to ring a bell when the bottom is in, but I believe that probably more likely the overall scenario is that the lows are in for the metals. Even if we see a punch below that, I don't think it'll be maintained on the downside.
Is the U.S. government again trying to sell off gold to keep the price down?
Well, you know, whether they're doing that, they might be selling paper gold, but if you look at what happened with this recent flap with the Bundesbank in Germany, they got something like 37 tons of gold, which was remanufactured. It wasn't even the bars that they had originally. And that whole thing is pretty strange, because they're only trying to get 20% of their 1,500 tons of gold back from that the Fed supposedly has. They've gotten 37 tons back, and they're told it'll take 8 years to get the 20% they're asking for. So it would be very fascinating to know just how much gold we really have. And I'm sure that's a deep, dark secret that people really want to hang on to.
China last year bought every piece of gold they could find, and probably even more than that secretly. Is that why Germany can't get their gold back?
I think that's part of it, but this goes back many years, and Gada especially has been talking about this for years. The fact that we haven't had an audit, the fact that the paper has been let out over and over and over again, and that there's no way to really trace a lot of it. And so this is going to become public knowledge at some point, but the Fed will do everything possible, and the other central banks, to delay that day of reckoning as long as they can.
So really, you could be looking at your gold certificate wondering, could I really go and ask for that gold to be delivered?
Well, even if it was, they would allow you to do that, whether they have it is a guessing game. But I do think that when this finally comes out, and the other factors that are pushing gold and silver into much higher levels, it won't be a situation where you get to say, oh, I've got a couple weeks to go down and get something. It'll come out in a way that will be shocking to the market, and suddenly there won't be anything there for you to pick up regardless of the premium you're willing to pay.
We've talked about the empty shelf syndrome and what that might do to prices. Is there a big lag between what we see physically and what they say we have?
I think there really is. I mean, the lag, of course, what's available physically for us is what you and I are interested in if we're interested in buying some. But the gold that they have in the banks, they don't want to talk about that. And so we can see there's just not this transparency. We have to guess at what there really is by looking at the import figures through Hong Kong into China and into India and places like this. But the analogy that I would use for people here in the States is what I saw early last year with the ammunition situation, where people suddenly decided that they might not be able to get ammunition for their rifles and handguns if they waited, and they all descended at one time on the stores and in the gun shows and things like this, and suddenly the most common round in the world, the .22 caliber round, was not available. And to this day, most of the stores you go into either have a limit of one box on many calibers, or sometimes there's just no boxes there for that caliber. So I think the situation conceptually is very similar to what's going to happen on the day that people realize that the gold and silver that they could buy just isn't there.
Sure, because I remember when the war in Afghanistan and in Iraq were really banging away, the U.S. government appealed to police departments to stop practicing with live ammo because they were running out.
That's an excellent point, and you're exactly correct on that.
David, you were just mentioning during the break to myself that when gold and silver decide to take off, boy, they're going to be like greyhounds let out of the gate after that fake rabbit.
Yeah, and I've already seen that from time to time when, locally, when the supply dries up a little bit and they can't get it for a while. And so I just think that, we talk about this and it's theoretical and people go, oh, we've seen lower prices for almost 3 years. It's never going to happen, but it is going to happen one of these days. And the fact that you might be 6 months early by buying some gold and silver that you have in your own hand, when that day happens, you're going to be so happy that you weren't an hour late.
David, you were always, you told a nice little analogy, too, when it comes to the price of gold or for low-priced mining stocks right now. It's just like when that $5 bag of flour in the store goes on sale for $2.50. Is it still not good flour, and is there anything wrong with it if you buy it at $2.50?
That's right, and I think if people looked at the metals this way and the mining stocks that they feel are quality purchases, they would be a lot better off. Rick Rule has made this comment many times in his talks in the different conferences, and I'm sure he might even mention it again here in a couple of weeks at the VRIC in Vancouver, BC, the big conference we've got coming up to the Cambridge House one. So if there's something that you know is good and you like and it goes on sale, why would you not buy it?
You said being a day trader in precious metals right now is probably a quick way to the funny farm.
Well, it's certainly to the poorhouse, and maybe the funny farm too, because it might drive you bananas. I remember here a week or two ago, I was looking at the metals before they opened up for the day session. It was a couple hours ahead of time, and silver was down almost $1, and I thought, boy, this is going to be a rocky session. By the time they opened, silver was up a dime. So, who can predict that kind of a thing? And if you're on margin like these futures traders are, that $1 drop is one heck of a lot of margin for you to come up with.
Where should a person be looking for opportunities right now?
Well, again, I think you look for the very best mining stocks if you're in the mining stock sector after you've gotten some physical. And I also think that whereas most of the time when a big strong up leg gets started in the metals market, the largest producers lead, I think in this case, because the largest producers have been so damaged to their share price because of a lot of their own self-inflicted wounds in addition to the lower price of gold and silver, I think that the juniors are going to be the ones, the better juniors are the ones you're going to see show strength first, and then I think they will pull up the larger ones as well too. But I think they're more nimble, and the ones that are still out there and are still producing profitably and growing their ounces, this type of thing, and I'm already seeing some of that with the ones that I follow, the ones that are up 10 or 15% off their lows, that just refuse to give ground even on days like today when gold and silver are weak.
I know it has to be pretty discouraging for people trying to make a profit in the mining industry when they see such low prices for precious metals.
Well, it is, and they tend to extrapolate out into the future that everything will be like it is now, only worse, just like they did at $1,900 gold by extrapolating that the prices will go up forever. And so you got to break out of that mindset. It's very difficult to do, and we none of us know how quick a particular turn is going to be, whether it's to the upside from down where we are now, or when we get a big rally, where that turn will be that will take things down for a correction. But that's why you don't put all of your eggs in one basket at one time. You go in layers and you go out in layers. And over time, if you've made good selections in the stocks that you follow, you'll come out ahead of the game.
David, I'm looking forward to seeing you in person on the 19th and 20th at the Cambridge House Conference here in Vancouver.
Well, the Cambridge House Conferences, that's always one of my favorites, and I'm going to be there presenting with David Morgan, and I'll be introducing some of the speakers in the speaker hall. And it's going to be interesting to see the level of attendance and also the mindset of people there to get a sense of what we might be looking at going forward.
I remember last year's, we started off the year with a lot of optimism, and by the time we went to that second mining conference about 4 months later, silence in the hall. So things could turn around very rapidly. They
really can, and I'm very optimistic that 2014, even if it starts out rocky like it is now, I think it's going to be a good year to be in the sector, and I think people that haven't given up and they're able to hold on to their quality producers and explorers and maybe even buy a little bit more, I think they'll be pretty satisfied as the year progresses.
Thanks again, David.
Good speaking with you.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.